I get this started. So first of all, this is one of many Clubhouse events I would like to do, mostly for and with my colleagues and friends in the accounting and bookkeeping profession. For the most part, anyone engaging in social media would be focused on trying to engage with new clients. In this particular case, this is not necessarily a new client environment. I think the vast majority of people I personally invited through Clubhouse or through Facebook or announcing it in my numerous networks are colleagues of mine that are fellow accountants, fellow bookkeepers. And I've had this discussion with multiple colleagues about, is it worth it to spend that much time with other professionals where you could essentially be investing the same amount of time in social media trying to engage new clients. And I want to tell you that there is room for both. I think there's a really important place in your heart and in your calendar that needs to be devoted to working with your colleagues, mostly because when you reciprocate each other with knowledge and tips and insight, you become a better professional yourself. And as long as all these people in your network don't have this sort of immediate reward mentality where I have to get something out of this networking event in order to make it worth my while, everybody grows together just by sharing knowledge with each other. So that was a very important kind of a life lesson I learned through the years. And I've learned to embrace working with other professionals, learning from other professionals. And for the most part, it took me trying to help these other professionals up front in order to build the credibility and the camaraderie that would then drive these fellow professionals to want to do things like this together. And again, this requires effort from all sides. But if you're a professional with a business, an accounting professional, a bookkeeper, a CPA, you probably do want to balance these things. You want to spend some time with networking with fellow professionals and some time hanging out where your potential clients hang out in. For example, I've been hanging out a lot in e-commerce conversations in Clubhouse. And every once in a while, somebody starts talking about LLCs and corporations and taxes and sales tax. And if there isn't a professional in there, you see those conversations go completely negative. And you raise your hand and say, by the way, this is my profession. Do you mind if I chime in? And they'll say, yeah, sure. Okay, here's a couple of corrections to your statement on sales tax, income tax, whatever. And then people find your profile and then they contact you on their own. I already picked up a client through Clubhouse, a client that an e-commerce store that needs some consulting around QuickBooks and Shopify type of consulting. But this is how for a lot of people start. You connect to where your fellow professionals, colleagues are, because for the most part, it's sort of easier to get started because it's right in your wheelhouse. It's the stuff that you know about and you feel comfortable talking about. So at least get you comfortable speaking in Clubhouse, moderating, exchanging information. There is an art to moderating because if you have way too many people talking at the same time, it becomes an unpleasant thing. If you have someone talking for too long, like I'm doing right now, it also becomes kind of unpleasant. So there's sort of an art to involving multiple moderators. There's an art involving the right speakers. And there's also an art of figuring out when that speaker has sort of finished bringing their input and starting to bring opinion and sort of just personal stuff. And at some point in time, you have to just kind of figure out the best possible way to kind of like stop it or move the conversation forward. So that's the stuff that I'm learning still. I don't think I'm an expert at that, but that's sort of the introduction to where we are. Let me start with talking about a couple things that are important to me, or I thought that were important to me in the last 3 to 4 months, is accounting conferences or technology conferences. During 2020, most of us did not get an opportunity to go to accounting conferences. I love going to network with people in person. I love speaking over there. I love exchanging ideas. Accounting conferences seem to start getting back to normal. If you check out accountingconferences.com, which is put together by our friends from the Cloud Accounting Podcast, again, it's accountingconferences.com. They have a list of all the live conferences that apparently are going to happen this year. So, for example, There is a big bookkeeping conference in Las Vegas in June called the BKX conference. There is an Acumatica conference for people that work with Acumatica, big ERP software, in May in Las Vegas. AICPA Engage in July in Las Vegas. Accounting Salon in July in New Orleans. National Association of Tax Professionals in Baltimore in July. Scaling New Heights, crowd favorite in my circles. It's in October in Fort Worth, Texas. A Sage conference in Las Vegas in November. So check it out, accountingconferences.com. Start scheduling your conferences, or at least I know I am, because I'm really eager to get back in an airplane and meeting and shaking hands face to face. All the things I want to just kind of discuss here, I think they're worth mentioning, especially if you're not, listening to accounting related podcasts and kind of watching the news. There has been some really significant acquisitions of technology companies sort of acquiring each other. For example, Bill.com purchased Divvy for $2.5 billion. Bill.com is an account payable management app that talks to QuickBooks. And Divvy was an expense management sort of, spool up a credit card to do your expense reports type of app that didn't really manage accounts payable. It managed expense management. So these two companies getting together is a monster of a merger acquisition in the accounts payable expense management front. So you're going to see a lot of interesting things from Bill.com and Divvy coming in the next couple of months, or at least the acquisition signals that. Also, an investment company owned or controlled by Jeff Bezos, the CEO of Amazon, purchased a company called Pilot, which is a sort of virtual bookkeeping accounting business. Generally, that's not really a big deal. The interesting part was evaluation, right? The amount of money that they raised, they didn't acquire, they just raised money for Pilot, puts Pilot in $1.2 billion with only a few thousand customers. So these virtual bookkeeping business in a sort of subscription, mass delivery business model, it's getting a lot of eyeballs, and you see it with the acquisition. So interesting for you to read up on that, check it out. So just look for the Pilot acquisition and search for Jeff Bezos, and you should be able to read more about that. Intuit purchased a e-commerce platform called TradeGecko, and this was an inventory management e-commerce platform. The purchase happened last year. This year, you're starting to see it sort of get integrated into the offering. And they also purchased a company called OneSaaS. And OneSaaS is an e-commerce integrator that sends information or integrates information from Shopify, WooCommerce, those type of platforms straight into QuickBooks and for free. So before you used to pay OneSaaS, now that Intuit bought OneSaaS, anything that connects to QuickBooks Online, it's free. So that's a really pretty big game changer for people in the e-commerce world. And that's kind of the industry that I'm evolving to myself. So those type of things just do interest me quite a bit. Now, in the QuickBooks world, specifically in the QuickBooks world, QuickBooks Online accountants should all have been upgraded to QuickBooks Online Advanced. So if you're a QuickBooks Pro advisor and you have a QuickBooks Online accountant account, your firm account should have been upgraded to Advanced account at this point. For everybody, that's pretty significant because accountants need to have the best version so they can train their clients on it, they can learn it. The other piece of news, which is sort of negative for some people, is that Intuit is discontinuing their IOP product, or Intuit Online Payroll product, which was a standalone product, formerly known as PayCycle. Intuit bought PayCycle like 15 years ago. They bought it from the founder, Renee Lacerte, who's also the founder of Bill.com. So you kind of see that coming full circle. Renee Lacerte, obviously, he knows how to sell stuff to Intuit, obviously. So I don't know if at this point Intuit will ever be able to buy Bill.com because of the size, but that gives you sort of an idea. So anyway, the discontinued IOP Intuit Online Payroll. A lot of accountants like myself have their clients in IOP. I have like 40, 45 clients in IOP. And when the news came out, it felt pretty catastrophic just because our payroll service revolves around being able to use this platform. Now, long story short, after a lot of angry emails and some nice responses from the Intuit team, we're going to be able to finish out the year 2021. And probably in 2022, I would have to make a choice to move my clients into the QuickBooks Online Payroll platform, which is different, Intuit Online Payroll and QuickBooks Online Payroll, or recommend my clients to go somewhere else like ADP, Gusto, whatever is out there. We'll probably open that for discussion because I know a few people here would have some opinion about that. So anyway, that's it for like sort of the news. So I wanted to kind of just update a few people that have been probably heads down working on tax returns if you haven't heard about any of those things. And then I want to start with the moderators. I'm going to ask each of you, what do you think about those news, those things that have happened in the last couple months? So I'll start with you, Jacob, because we didn't get to introduce yourself.
I don't know how many of our moderators spend a lot of time on Clubhouse, so I want to make sure we're all in agreement on your moderation side. So the things I see that work the best is if you have something you really want to comment on something, tap the mic a bunch. Tim and Hector are going to be watching for that to call on people. I also want to know, I noticed a hand was raised, so I wanted to know what your thoughts were on people in the audience and how you wanted to handle that.
Yeah, so
set some ground rules up front.
Yeah, so I'll let's do this, Jacob. So between yourself, I, Megan, Donna, kind of the people that sort of agreed at the beginning and say, sure, we'll do some moderation here. We'll stop someone if they're going too long or change topic in a nice way. But whoever last spoke, try to sort of like evoke the next person. So we'll start like that. Jacob, first, what I'll also do is I want you to introduce yourself in 30 seconds. So you say your name, where you are, and kind of what your specialty is. And then only the first time you start speaking, and then jump right to it to whatever you want to bring in. So Jacob, any comments about the stuff that I just mentioned?
First off, I'm Jacob Schrader. I run a firm in Ohio. Met Hector through the Accountants Council, which is an amazing experience. Kind of specialize in advisory. So we sell advisory services and then downsell bookkeeping and tax. So that's kind of who we are as a firm. Coming out of this tax season, I think we've all been super heads down, right? And under the water from all the tax changes and PVP and everything else. But definitely been staying on top of that news and excited to come out and start exploring some of those options. I think obviously there's a big push you mentioned in consolidation of software. So I think we're going to start seeing that trend increase as we have a lot of players in many spaces. You see Intuit's acquisition of OneSaaS. Think of all the connector apps we have today. I think we're going to start seeing some consolidation there. Bill.com's acquisition of Divvy. Divvy was starting to look at getting into bill pay as well as expense management. They had demoed a feature of like that set to us. So then you have Veeam, you have Melio, you have Roger, you have all these other ones. And Bill.com's like Goliath in the room. So they're saying, let's buy some of that competition. So I think that's going to be a trend we start seeing as we've had a lot of competitors in a number of spaces. We're going to start seeing some consolidation, right? Inventory, perfect example. You see Square bought Stitch Labs. Now Intuit has bought Trade Gecko. I think you're going to start seeing some consolidation of those inventory apps, whether that's into a system or together, just for economies of scale. There's so many players in that. I don't think they can each be truly successful independently. So I think we're going to start seeing a lot of narrowing of that. The pilot and those things are really interesting as they start raising money, just because some of them are starting to look into branch into tax as well. So we might start seeing some innovation on the tax side, which really, if we go back to our tax softwares, there hasn't been a lot of innovation in tax. In the 10 years I've been in tax, actually a little more than that now, frankly, the base product is the same as it was 10 years ago. We were on ProSystems FX then. We had the scan software. It scanned in. It recognized forms. That really hasn't improved that much until today. We don't see a lot of innovation on that side. And I think these tech companies getting into this space, getting into it with their bookkeeping service and really wanting to automate tax, I think they're going to start pushing the envelope on the tax innovation side of things, which I think could be really exciting for our industry, as well as create some challenges, right? Just because as some of that gets automated away, it will change our workload. But as always in automation, for a person like me who specializes in advisory, super exciting because it frees up our time to go do those advisory things. So we'd love to hear what some other people have to say on this. And I don't know if I touched on them all, Hector.
No, that's great, Jacob. Thank you for the input. Let's bring Coco in. Coco, so quick 30-second introduction, your thoughts about the changes in the industry in the last couple of months, and maybe you can talk about tax. I know tax is your thing, right?
Hi, Hector. Yeah, it's been a hectic season, but hi, everyone. I'm Coco. I'm owner of Green Balance Accounting. I am in Mobile, Alabama on the Gulf Coast. And yeah, I specialize, honestly, I know I'm really specialized in cleanups and advisory. Tax is, we specialize in it, but is it an add-on service? So we look for cleanup and advisory, clients that need advisory services. So, but I would love to see some innovation with tax and just streamlining, consolidation, everything that you guys have been talking about with some of the, I guess maybe of the larger firms. I guess it's almost there, but I use a mix of software between CrossLink, Taxaroo. I've looked at a number of different things, and I would love to just see some of the different perks and benefits of them consolidated into one. So it's like a one-stop shop. So, and I love the conversation. So I'm just kind of chiming in. I'm in here with my kids in the evening, so I'm just listening, and I'll chime in when I see fit.
Thanks, Coco. Matthew.
Hey guys, Matthew Fulton with Parkway Business Solutions. As Hector was saying, kind of the area that I really focus in is workflow design, trying to figure out the best ways to take the app process and the manual process and simplify it, combine it together. Using technology in our firm is paramount. It's been something we've always focused on. I've always felt it's part of my job to try to know what are the different apps out there and what can they do, so we can always be improving, I guess is a good way to say it. Love using companies like CData, which allows me to extract data from numerous different applications and move it over somewhere else. And then even further, we have long-standing relationships with software developers that, should we need to with different clients, we can actually engage them to try to build out different connections if we need to.
Yeah, so you mentioned CData. What are the other apps that you've been working with that you've found success with?
So also a person that lets you do a lot of the rebuild type work. Money Thumb has been a very, very popular one for me, where there's just no better answer if you need to take a PDF statement and really do OCR technology on it. Already said CData, of course. Let's see what else. Microsoft Teams. I'm a huge proponent of Microsoft Teams. We run our whole firm on that. And those are the primary big ones we use all the time. We use Bill.com, but I'm not a big fan. And we've got some other small ones that are specific to different industries, but nothing that we use like consistently as much.
All right, thanks for your input, Matthew. Steve, do we have you now?
Yeah, I'm here. Hey guys, I'm Steve Chase. Great to be with you guys here. I have a sole practitioner practice right now, and I really have enjoyed helping my clients with the bookkeeping, the cleanups, the teaching. I do a lot of training with Microsoft Excel, but mainly where I see the industry going, Hector, is just, it's all about the relationships, and it's just so powerful. Like when PPP hit, just to have those relationships.
So yeah, I agree with Chase 100%. I'm not sure where he was going with the relationships, if he was discussing relationships with bankers or banks. I would definitely agree, especially the CPAs. I know Jacob personally, had a lot of wins, from a long-standing relationship with a local community bank, where he was able to siphon all these small business clients through a small bank that was willing to listen and understand the loan application process, while all the big banks were sort of behind trying to understand the rules and the laws and that sort of thing. And at the same time, I also think that relationship with others. I know I had many other accounting friends that chose to study the PPP and the ERC and all these SBA type of loans. And I know we talked to each other quite a bit, Jacob being one of them, Matthew being another one of them, saying, hey, what do you think about this? What do you think about that? And then together, I think, exploiting our social capital, for lack of a better term, we were able to be better, more responsive, and get our clients, sort of first in line, into these programs. So I agree 100%, Steve. I don't know if you're back in, you want to finish your sentence. Otherwise, I'll move it on to, maybe we'll circle back to Megan, maybe. Megan, what are your thoughts about the changes in technology and maybe the relationship thing?
God, there's so much that's gone on in this meeting so far. So I'm Megan Tarno. I run the Mobius Group, which is a small consulting practice focused on nonprofits up in St. Paul, Minnesota, although I'm currently calling in from Chihuahua, Mexico. Some of the biggest things that are hitting us, I think, are that purchase of Divvy by Bill.com, because we've been using both of those apps for a long time. Divvy is a favorite of nonprofits, right? Because they actually based the organization's credit on their Dun & Bradstreet rating rather than tying it to a particular individual. And that's huge in the nonprofit sphere, right? Because we don't have owners. So when you're asking us to fill out a credit application and put down the owner, there's like, doesn't exist. We don't have such a thing. So that's been great. And then also the ability to give, everybody who needs one a credit card, but set some guardrails around it with the budget, and then have them, capturing their own receipts and having all of that, sync into QuickBooks for free has been really tremendous for my nonprofit clients kind of in this space. And so I'm a little nervous about what's going to happen now that Bill.com has purchased them. The AP side of Divvy was terrible. So, yes, I'm curious about that. And then like you, Hector, we're on Intuit Online Payroll for accountants. We've had that. We've been running all of our payroll on that for 10 years, probably. I think, used it when Intuit initially eliminated payroll for the Mac back in the late 90s. We moved to PayCycle. So that's been a long time. And I'm concerned about what that's going to do to our practice and our clients and where we're going to go. So that's definitely something that's on our radar. And then I also just wanted to, you mentioned how important other accountants have been in the last year. And I think it's amazing for people who are kind of getting into this industry now, because there are so many resources and there are so many ways to really connect directly with each other in a way that we couldn't do 10, 20 years ago. And that's really been my saving grace, I think, for the last year, is that I had a really strong virtual network of people that I could continue to reach out to and communicate with, even though I was locked in my house. And I cannot wait to see you people in person again at conferences this summer and fall. And I'm going to pass it back. Thanks, Hector.
Yeah, awesome. Thank you. I agree 1,000,000%. Donna, you want to chime in? Anything interesting you want to comment?
Yes, thank you. Again, Donna Reed. I run a virtual bookkeeping business in Orange County, California, is where I'm located right now. As I said, it's virtual, so I move around a lot. The things that I'm looking at, I'm big into cleaning up messes, largely focused on Shopify and Amazon in the e-commerce area. So that's a lot of fun and has its own challenges. I'm looking forward very much so to QuickBooks Online integrating the QB e-commerce, maybe one SaaS, and getting that working. Unfortunately, they have they're selling it out there and people are asking me about it, but I have no idea what's going on because they don't tell us anything. So that concerns me. The other things, but payrolls, I moved to Gusto like years ago because I'm QuickBooks Online only. And I want to leverage the power of that, but their payroll was causing a lot of problems for myself and my clients. So that was the reality of that for me. But I'm really staying focused on that e-commerce, and because I think that's where we're going. And if nothing proved that out, the last 18 months, 2 years, 18 months was proved out even more, because I doubled my business. I'm up 115% right now. And I had to turn away people at this point. I'm just starting to bring people back on. The other thing is I did start out 2015, and I have to tell you, I started out watching videos from Hector and Veronica, I believe she's on here, to learn my way through the business. And now I'm sitting here in a group moderating with them nearly 6 years later. So it's a wonderful journey for those who are just starting out look where you can go if you just like pay attention and engage and keep working at it. And it's Donna, and I'm out.
Thanks, Donna. And Megan's right. We kind of have a plethora of topics. So what we'll do is we'll let Audra introduce herself, add some comments, and Veronica, and then we'll pivot over to maybe some specific topic we can deep dive in. Audra?
Yes. Hello, everyone. I am Audra Wilson Russell. I'm the owner of Watt CPA firm located here in South Florida. And we specialize in the outsourced accounting, tax preparation. Oh, okay. All right. So, so Donna, my story is pretty similar to yours, where I started off full time in my firm at the end of 2015. And just like yourself, started out watching Hector, Michelle Long, and, everybody, and just kind of learning the ropes of this, virtual accounting environment. And I can say that this tax season it's been one of my growing pain tax seasons, where it's taught me the direction of where I want to go with the firm. And so I'm being really, really picky and choosy about who I work with right now. I was a part of Hector's initial pod for his program, where we sat down and we identified our ideal clients and all of that stuff. So that also has helped me kind of focus in on my niche, which is the daycare providers. And so it's been really hard for me to break into advisory services, and just, still learning about that and how to go about delivering those services. But this year has definitely been one of those growing pain years, I should say.
Awesome, Audra. Thank you. And maybe we could dig into the whole advisory services and what does it really mean and what does it look like. Maybe that could be the next topic. Veronica, you want to chime in on the stuff we talked about so far?
Yes. Hi, everyone. I'm Veronica Wasek, and I'm the CEO and founder of VM Wasek, and we specialize in bookkeeping and advisory for Shopify sellers. And I also have a YouTube channel, 5-Minute Bookkeeping, and a Facebook group by the same name. And since, same like Donna, the last 18 months have been so exciting working with e-commerce, and choosing that as a niche on purpose, knowing that it's very complex, and then realizing that it's such a broad niche that I needed to find a smaller niche, and landed on Shopify. From a technology standpoint, I think it is a challenge to try to put together all of the different apps and the app stack for our online sellers. And also dealing with the expectation of my clients that their e-commerce accounting should be automatically done somehow by all of the apps. So it has been interesting. I think it's a great opportunity to be able to advise clients on the technology that they need to use to do what they want to do as far as their financials and managing inventory or dealing with sales taxes. But at the same time, I'm ready to see some consolidating of apps in the e-commerce world. I think we're probably, I'm guessing, about 5 years away from really seeing something work well. As Donna said, QuickBooks has purchased TradeGecko, or a couple of you said that. And I have given my input to Intuit Corporation about the functionality that QuickBooks Commerce needs to have. It's not there yet. I haven't heard anything either, Donna. So I'm not sure what's going on, or if they're waiting because they purchased one SaaS maybe to see how everything will work together. But yeah, that's what's going on with me. Just loving e-commerce. It's a great opportunity. Back to you, Hector.
All right, thank you. So we got a couple of common themes here that I think will be worth discussing. E-commerce was discussed a couple of times, and sort of challenges around figuring out how to advise clients correctly came up too. So I think let's merge the two, and let's just kind of deep dive into picking a difficult area of specialty and I'm assuming e-commerce is difficult. I know for a fact it is, but I'm not an expert in e-commerce. I'll let the experts discuss it. But just picking any sort of difficult niche or target market, the type of target market that wouldn't allow you to have 1,000 customers, right? Just because it is difficult, which difficult means time consuming. Time consuming means you can't have that many clients, which also means that you probably have to charge top dollar and only get the ones that are really serious about going deep into it. So there's kind of a domino effect, right? So you pick something very difficult to do, and then that will lead you into having a client that's most serious about spending making the investment into going really deep into e-commerce integration or whatever that difficult niche is, and then that being a catapult to give you then the time and space to then be able to give your clients advice. The number one challenge I find with, and I'm going to go back 5 years, 6 years when I was in growth mode, where all I wanted to do is another client and another client, another client. And I was just trying to figure out how many clients can I stack up, in my monthly billings or my annual billings. And basically my focus was getting as many clients as possible, because in my mind, that was the only way to grow. But going back 5 years, it was very difficult to give those clients the individual attention, not just attention to talk to them or to listen to them, the attention to observe them. I mean, there's a part of advisory that I don't think they talk about a lot in our industry. They do a really good job saying, hey, you have to listen to your customer. Look, before listening, there's like sheer unadulterated observation. What's observation? Hanging out in the warehouse for a day, watching people work, watching people interact. Okay. Thinking about the client, thinking about the interaction you had 6 months ago, thinking about the interaction you had last month, comparing the two. Has the client evolved? Has the client evolved? Not all advisory is a direct one-on-one conversation where there is a question and an answer and a problem and a solution. A lot of advisory is sort of this tacit knowledge that you learn from the client or the type of client, and then it helps you read between the lines. It helps you understand the real question. In my experience, 90% of the questions that clients ask, they're not really asking the question that, if I were to answer it directly, drives or gets to the answer that they're looking for. Many times, I have to take into consideration who the client is, where they are, our history together, how their business is doing, who their employees are, the industry they're in, and then I have to extrapolate all sorts of extra information that's not in the question in order for me to understand what is it that the client is asking, and then answering that question, the question behind the question, and being able to dive deep into the real underlying problem. That's what I call true advisory. That's the type of advisory that people would pay for. But generally speaking, hey, I'm an advisor. I'm going to ask you questions, pay me money for answers. That's not what most people are open to pay. So I think Jacob wanted to speak.
Well, yeah. So you talked before, like you were just trying to get clients on, but you couldn't serve them well. And I often go back to Jason Bloomer's line that you need to sell services that your clients can consume. And I think a lot about this, and I've actually adapted this on, many times we think about consuming food, right? So you're going to consume food. Well, for you to consume food, so for your client to be able to consume the food, you have to go do the prep for them. You have to prepare the meal for them. And that takes a lot of work ahead of time. That takes understanding the client. If you ask your kid, what do they want to eat? They want junk food, of course, right? That's what they want. They want junk food easy. As parents, it's not what you're going to give them, right? So many times they're asking for things, and that's not what they need. But you don't know that unless you've done the prep ahead of time to know what they truly need. So selling, when we sell advisory services, our ideal client is someone who can consume our advisory services. That means not only will they pay for it, they'll actually listen to it. But for us to be able to sell that, we have to go do a lot of prep work, or else we're going to provide them with junk that's not good for them, and soon they'll turn away.
I like that analogy. And Audra, since we've had interactions together, like 2 years ago, you learned something from me about pricing, and positioning, but you're saying you're having a tough time this year adapting, figuring out, how to advise your clients. And this is not a personal thing, but what do you think from your perspective, and maybe many of the fellow practitioners here, what's the challenge that we're having? What is the real reason why we're having a tough time being able to deliver that type of advice?
I think for me it's twofold. On one end, with the current clients, I have to admit I took on some clients at like some really low prices when I initially started my firm. So to kind of to sell them on the value of advisory while they're paying such a low rate already is kind of difficult. Like, I barely have you enough money to pay you this low price right now. So I know I don't have enough money to, pay a higher value add service. So those are the existing clients that I have difficulties converting over into advisory clients. From a new client perspective, there's something broken within my sales process. So I get a ton of hits on my website from single member LLCs, small business owners, maybe they're 1-man, 2-man shops, just starting out, looking to get on the right foot, but they're not necessarily the clients that are in the space right now who needs advisory. So I'm spending a lot of time going through clients that just do not even qualify to be an advisory client. So that's been my difficulty in breaking into the space.
And I guess the challenge also is that we might have the mindset that we need some of those smaller clients so we can fill our capacity and pay the bills. So we can turn them down in order to make capacity for the quote advisory clients. But I think, long story short, Audra, and again, not personal, just trying to make it as generic as possible. And you mentioned value and price, and that triggers me, so I want to avoid going down that road. But the reality is that, as Jacob said, we have to do the homework. Homework requires us to have free time to do it. And there is a type of client that will never give you that free time. Now, I'm not talking about the client's personality disorder that requires all this time. Yes, that's a factor. But I'm just talking about the expectation that was set when you took the client in. So if you want to be in the type of business that helps as many clients as possible, then you got to figure out what is the bare minimum of help you can provide and just take in as many clients as you want. But it's going to be bare minimum help. And it'll be very easy for you to lose that client because it's very commodity. But, as Veronica was saying, once you get into a client that's growing that e-commerce platform and is bringing more channels and is bringing inventory and is bringing, let's say, complicated things like Kickstarter and kind of crowdsource funding where they pay you up front for inventory you haven't even manufactured until the future. Or they start bringing in things like, we have consignment locations and multiple locations. Look, the type of attention that you give that client, right? It is so time consuming and so emotionally consuming. Emotionally because you have to spend time learning an app and spend 2-3 hours to realize it was the wrong app. And you have to go fetch the next option because this happens a lot. There's so many apps right out there that advertise the word, quote, integration, end quote. And integration means many things to many people. And it's not standardized. And even if you were to standardize it, there isn't a standard, right? So every app manufacturer, every accountant, every small business owner has their own perspective out of what integration means, different needs, different needs in terms of what data they want integrated. So what we are going to spend a lot of time doing trial and error with different apps, even apps that we know for one specific client until we get the one that has the right buttons, the right workflow that works for them or adapts to the current workflow. That type of work, you cannot do in combination with taking 100 other, bare necessity type client. So Audra, I think the challenge is you either are a practice that focuses on the larger clients or the clients that grow with you type of thing, or the ones that just wants to help everybody. And I understand 100%. I say yes to a lot of people I shouldn't. I break my own rules. Okay. Last year, I cannot tell you how many new clients I had in which they had a death in the family or a death in their accountant because of COVID. And that stuff melted my heart so much that I completely forgot whether the client was in my right wheelhouse or not. And I just, okay, I understand. You were a victim of the pandemic. I will help you. Our firm will help you. So I understand the emotional aspects of getting stuck with a client that at the moment it felt right in your heart to help them, but it didn't fit into that larger business model in which you're going to charge for your thinking and for your observation. Like Jacob was saying, like I was saying earlier, we need to charge for the time we spend thinking about the client, not punching keys on the keyboard, not cleaning up their books, not preparing a tax return, not one-on-one time. We need to charge, or we need to have enough value in that price to include all the wealth of knowledge and experience that we bring to the table, even while we're doing nothing for that client. Because look, Veronica and Donna will focus on e-commerce, right? They'll spend 6 hours trying to figure out some magic button to press or some bug in some app to integrate X channel with QuickBooks Online and send information to the shipping company or whatever. You spend 6-8 hours doing that. You finally figure it out. The next client that has the same issue, you would press the right button, make it look easy, and not account for those 6-7 hours of investment you made learning that one little tiny trick that made the engagement with your next client feel like a 2 or 3 minute thing. And that's the crux of it. The crux of it is that either you are all in high touch, high tech, high attention, high value type of engagement comes with advisory, because advisory is not, okay, let's sit down, we're going to have 1 hour advisory. Advisory is helping people make decisions that are better than if they were on their own making that decision. And in order to bring value there, you might have to bring this plethora of experience that it's like tacit knowledge. You can't quantify it. You can't put it in inventory. You can't have a book bag full of boxes and say, these are my little tricks that I learned through the years. That stuff is sitting in the back of your head as experience. So I think that might be the challenge, Audra, is just taking too many clients that don't fit that category and then just being stuck having to serve them and then feeling bad about dropping them, right? Because they need you or whatever. Would you say that's about accurate?
That's 100% accurate, and that's been my aha moment this season.
Hey, Audra, I want to chime in here, and Hector, I'm going to disagree with you a little bit. As a firm, I don't think you have to be all in one way or the other. And actually, I think those low-value commodity clients can be a great launching point for your firm because they can be systemized and you can hire someone to do them. As the owner and the high-level person, or as an advisor, whether they're hired or not, they need to have time to think. But that doesn't mean everyone on your team has to be that way. So those low-value clients, I'm calling them low-value because normally they're lower dollar. They're just simple, more straightforward to do. And even that can be a decent-sized engagement, but low thought process clients, because you have a system built, are a great basis for a firm that can help a firm cash flow very nicely as it scales and does more and more advisory. And, I always say you change a firm one new client at a time. So you are correct that it's probably going to be hard to go back and sell those clients that you already have on higher level advisory unless there's a fundamental change in those clients, right? Now, if one of those clients is like, all of a sudden, like, I'm going to go acquire 3 other daycares. Okay, now suddenly let's talk about adding advisory services in here. Your situation has fundamentally changed. So now you're a new client, basically. But otherwise, you're going to change your practice one new client at a time. And you kind of, as an individual, you can only take on so many advisory clients, which is why I say you have to systemize the other and hire someone to take it on if you want to continue to scale. And those are great cash flowing pieces.
Only thing I add, and I'm not susceptible to the disagreement. I actually like it. I like the disagreement. I would love to see more of that so we can kind of get two points of view. Only thing I'll add is even the most brilliant people get burnt out when they split their mind in different ways. So I agree, because I have this sort of multifaceted, multi-talented practice where we can do a lot of things at the same time. So I agree that that is possible. Just if you get a solopreneur and not like a sort of a two-person partnership at least, that you can delegate one part to one person and say, hey, you're going to be in charge of kind of maintaining the systems in place to all these systematized clients, and you're going to go revise and refine those processes so our system gets better and better. And then I'll kind of concentrate on solving some of these high-level issues. And then maybe once a month, you and I will kind of have an after-action review and kind of learn from each other what everybody's doing. I think that might be more feasible. Just a solopreneur or let's say a single owner consulting accounting practice might have a more difficult job doing that. And Jacob, you don't have to respond to that, and I'll give some other people an opportunity. Maybe we'll jump into Matthew. Matthew, you got anything to say about any of those things?
I'll just say I completely agree, Hector.
I'm going to pop in for just a second, Hector, because what I noticed in what you said is that, on the one hand, there's all of this conversation in the space about automation, right? And all of the apps are just going to do the work for us, and it's going to be tool management. And yet I think everybody, all the speakers I know that have a niche, right, have focused on things that are difficult to automate, or the apps have not caught up with the work we actually have to do. And maybe that's part of the tension we're feeling, and that exists because clients are getting that message too, right? This should all just be automated. I can drive it all from the bank feed. And yet we know if they're really doing it right and they're capturing the information they actually need to be able to make those decisions, you can't do that from the bank feed, and you can't necessarily automate it. What do you guys think about that?
I agree with that completely. As a person who loves trying to pretend to automate as much as I can, automation is smoke and mirrors. The goal is that hopefully the concept of automation, the time you save through some of it, let me rephrase it, the time you have to spend to maintain it is still less than the overall amount of time you save by implementing it, of course. And I don't think that we're not ever going to reach a full point of automation. And even as things progress with technology, we just become the people that have to understand how the technology works, which is why workflow becomes so important in my mind, and making sure those connections stay solid. So I don't think automation fully exists.
And can I chime in too, and Megan, that you are right, that I think the opportunities now are to find a small niche and find the technology that niche is struggling with and specialize in that. And it's a very, very small niche, and it's a little scary in the beginning, but for me at least, it has been very, very successful. I'd like to add a different thought also when it comes to advisory and how I know the big push is toward advisory, and we talk about going after those bigger clients. But one of the things I have found is that you can also do online education for the smaller clients who maybe can't even afford your services. So again, that has been very successful for me in doing education and training bookkeepers, training business owners, providing online courses. And that allows you to then capitalize on the smaller clients who maybe they're not ready even for you to do their books. They're not ready for advisory, but you're just helping them with the things that they need help with in whatever your niche is. So, for example, for me, it's online sellers trying to set up their own books, teaching bookkeepers systems. So there are a lot of other opportunities beyond advisory that I think for many of you, I would highly encourage you to look into.
Thanks, Veronica, for that. I do have some feedback on that because I have a guide that I created, kind of like a business roadmap for small businesses. And so it is very kind of entry level for those small business owners. And it's something that I plan to put in an online course. But I've struggled with that because whatever I do, I want to put that energy towards getting the higher value clients. And I feel like if I went full on with this one at the entry level, then those are the type of clients that I would attract, the very clients that I'm trying to get away from. So what are your thoughts on that?
I'm going to jump in on that if you don't mind. Audra, the free tool, right, the free resource, let's call it that, the free resource or the low price resource. So Veronica mentioned having courses for that sort of low end client, or you mentioned having a guide or a PDF or something like that. You can leverage that free source in really interesting ways. For example, let's say that you're just going to throw it out there. Your baseline price, and I'm just going to say, not going to say by hour, baseline price is, let's say, $300. And that's kind of like the dollar amount, the lowest lower amount that you use to say, this is the lowest I take a client for. But if you start leveraging a free resource, you go to that small client and say, hey, by the way, the lowest we take is 500. And all I'm saying is you kind of, you widen the gap between the free and your current low end and say, hey, our lowest client would take is 500 or whatever. However, if you need time to get there, here are some free resources. So here's my YouTube channel. Here's my free guide. Here's this course, a course that you sell, or maybe a colleague sells. And then after you're done with all that, if you think you graduate from that and you need something that's more in this range, that might be a little bit bigger than what you were looking for. And Audra, also stuff that you yourself, had thought it was sort of at a lower scale, that you would bump that up and basically takes away some of the fear that you have that, hey, maybe my low is too expensive or whatever, because you are providing this sort of free alternative. You understand what I mean? So I think that you can using that or leveraging that will not drive you towards that type of client. It would actually do the opposite. But what you have to do is you have to widen the gap between the free resource or the low price resource and the next thing, in order to then have the client will have a really clear choice. Say, I'm not ready for her. I'll go with the free resource. Maybe you lose it, but you get the time back to dedicate to the bigger sort of clients. So Veronica, I don't know if you were going to jump in. I think I'm
going to pop back in on that one just for a second, because I just think that's so completely true, right? I look at so many of the speakers, and many of us have Facebook groups, and we give a ton of stuff away for free. And what that does is actually build your expertise, right? So that you can then say, like, they've sold themselves before they ever come to you. And so then part of the challenge becomes staying strong and knowing your own value and being willing. Like, I got a soft heart too, and it's hard in the niche I work with because a lot of them are poor. But just to go, like, here's a bunch of resources I have created for free. But if you're actually going to work with me, that's not going to be free. That's going to be more expensive. But you've built the value already, and they are out there trying their best. Like, you don't have to sell them. They're out and they are selling themselves and trying everything they can to figure out how they're going to work with you, because in their eyes, you are already the expert.
Perfect. Thank you. Let's give Coco a chance to chime in. We lost Veronica, but Coco, do you have any comments or questions?
No, I think, just to kind of add that, what you guys were saying about the value with the clients, the disparity between the pricing and the different services that you had, very similar to what Audra had. I found myself in a similar situation in the services that I was adding at one point. But I also agreed, I can't remember who said it, but just with the disparity in pricing and the services that you offer. In the beginning, I was offering some lower tier services and then gradually changing the pricing one client at a time until I found myself in a space where I definitely felt more confident and more comfortable with offering those higher price services. And after having a coach, following you and Veronica, I have a ton of Veronica's courses, and I'm waiting on her next course that's coming out. So I can't wait until you release that, Veronica. But just gaining that confidence from my peers and just, the information that you guys put out gave me the courage to increase my prices. But knowing when it's difficult in the beginning. So I'm in a similar space with you, Audra, where I'm trying to, I think I've gotten to the point where I'm comfortable with it, but it's a process every day with every new client. And then also the same thing with just this season, definitely pointed out some issues that I had in my onboarding process. So I find myself now going back through the onboarding process that I, got with Veronica with, but I'm finding some of the holes and maybe some points in that process that I didn't really map out the way I should have in the beginning. And this growth that's happened over this pandemic just kind of highlighted that to a point where I was just like, whoa, this is out of control. Trying to almost technology overload in a sense, to where you have all these onboarding automations. You got Dubsado, ClickUp, Financial Sense, all these things to manage your firm, and it becomes overwhelming at times. So, during this off season, one thing I'm going to do is kind of take a step back from everything that I've attempted to implement or even implemented successfully, and just kind of go back to the drawing board and start from scratch, in a sense. Not with everything, but in a sense, just on a whiteboard, start from scratch, just because it has been extremely hectic season. I've gotten through it. My business has more than doubled. I'll even say tripled than what it was from last year. And I'm a team of 3, and hopefully become a team of maybe 5 to 6 before this next season. But that's just some of the things I had kind of jotted down as I was listening to you guys talk, and how this season has affected me and what I'm looking forward to doing. And I am done speaking.
Thank you, Coco. Veronica, you want to chime in? I know you were going to say something earlier.
Yes. Sorry, and I got kicked out, so hopefully I didn't miss too much of what you guys were saying. But so back to what Audra was saying on the fear of that you're going to attract the wrong client for services if you're selling courses, for example, or resources to them. So I think that people who consume your, say, courses or even free content, I think they're self-identifying what they're ready for. And so what you have to make clear to them is then, if they want to work with you, what do those services look like? And how much do you charge? Or what's the entry level? What's your minimum? That's one thing that I had to work on quite a bit in the past few months, because I was getting so many prospects who weren't necessarily qualified, is to then be very, very clear on what's the minimum price that I charge, what do I do for them, what does that look like? But at the same time, keep in mind that there are some smaller business owners, newer business owners, who are still willing to pay a premium even though they're small. And I learned that lesson this year, because I thought, who's going to pay, I don't know, whatever, $1,800, $2,500 for me to set up their QuickBooks? Well, some of them are willing to pay for it. And then we're averaging, I don't know, $300, $400 an hour, because we have systematized the process. And so it's really about, again, knowing who your ideal client is, knowing what your services are, communicating clearly what those are, as well as your starting prices.
Excellent. Thank you, Veronica. So Shawnette came up the stage, and maybe she wants to comment or ask a question.
No, Hector, thank you for inviting me to the stage. I really appreciate it. You guys are like my icons. You, Matt, Veronica, and Donna, everyone. So I really appreciate just being in the atmosphere today. So it's been a really exciting year. I thank Veronica for motivating me because I want to go into the training space. I've been trying to go or target more of the training clients. My challenge has been, like it has been for Coco, and I think it was Audra, really having a heart for the lower end clients, but then trying to bridge the gap between the lower end clients and that segueing between the free material, the resources, and that first level, that lower tier of services. So I can echo what they're speaking about. That's just been my challenge. And I do have clients, like Veronica said, that are willing to pay premium prices, but there's that guilt on the back end, knowing that they're probably struggling to pay it, but they actually want to pay because they want the service that you offer. But I'm just glad to be on the stage, Hector, and I'm just excited to be amongst you guys.
Awesome. And Donna, you've been quiet for a while. Maybe my fault for not making the rotations. Any comments or anything?
Yeah, so the bottom line for me and my business, because I am solo right now, although I will be adding a team in 2022, and this goes to that also, is it systems and processes for every single thing I do in my business. Every single thing. And whether it's a system and process to automate by human or automate by using some piece of technology, there's a system and process for everything. And that comes from every time I bring a new client on, they're always doing something a little different. I build a system for that, and then I resell it. And then same thing. That's sort of how I built my business. Is the first client, I built a system, then I resold it. Then I learned a new piece of technology. I built a system and I resold it. So it's just a compounding effect that happened over time, and what has allowed me to scale so quickly also. And I've done it.
Perfect. And it's been an hour already, so I know that we might start losing some people at this point, but we'll end the let's call it the semi-scripted portion of the chat. I know some people will want to stay and hang out. I'm going to make everybody that's on the stage now moderator. And anybody that wants to raise their hand, we can come up and ask a question to any of the people up here. You've heard us talk for an hour. If anybody wants to raise their hand and ask us a question. So let's just do Q&A. So does anybody want to ask a question to any of us? Just raise your hand, and anyone that's on stage, if you want to ask anybody else a question, you can do so as well.
I have a question to anybody on the stage, mostly those working in e-commerce. What is your process for doing your due diligence on which apps to connect with which clients, and looking at the integration between the apps and QuickBooks Online or whatever accounting system you're using?
I'll answer. So my niche is not just Shopify, but it's Shopify sellers who are using QuickBooks Online, and then we only use A2X accounting to do the integration for them. We do nothing else. And so that made it super simple. We've systematized everything. We know exactly what services we provide. We know what effort it takes to do those. And if somebody comes and says they want to use Webgility, I turn them away. And so that was my answer to dealing with all of that.
Can you expand on that without getting into the weeds? We'd love to know what that means.
Expand on what exactly?
They want to use Webgility, turn them away. I found that evocative and provocative.
Yeah, so and nothing wrong with Webgility. It's just that my app stack is QBO and A2X, and that's what I chose to become really good at. And so if they use WebGility or any other app, then we either say this is the way we do things. If not, we can't work with you. As an example, somebody asked me to set them up on QuickBooks Commerce, and I turned them down.
So the moral of the story here is that you pick your apps that you integrate with, the channels that you will support, and if your client will either not listen to your advice on that or be vehement about a specific app or process they want to use, or work with a channel that's not within your tech stack, you just simply, without any pain in your heart or anything, you say, hey, this might not work, right?
Correct.
Sounds easier said than done, right?
Yeah, it works though. I have clients coming in all the time, but you have to be all in, and you have to be confident in your skill set and the solutions that you bring. Sure.
We got invited Alicia to the stage. Jacob, you want to say something? Sorry.
Yeah, I'll just chime in there. We do a lot of off the wall projects for clients. We really do those things that everybody else says we don't know how to handle them. That's the clients we love. We'll dive in, we'll figure it out, we'll make solutions happen, even if it's never been done before. So we end up playing with a lot of different apps at different times. And one of the key things that I always use is, let's get a test file. Let's grab a test QBO file and start shoving data into it. How does it come over? What does it do? A lot of research in online groups, feedback on how things are set up, what they're doing, reaching out to colleagues that are also in that industry and space and saying, how do you like this app and what does it do? But one of the big things is when there's a truly unknown app, it's just plugging it in. I like a test file because then I'm not messing up the real file. If we're going with a real file, we definitely go use something like Rewind so we can wind it back and undo it all and start it again.
Good add-on there. Alicia, you're up in the stage, and do you want to introduce yourself quickly and then ask a question?
Sure. Hi, everybody. My name is Alicia Katz-Pollock. My company is royalwise.com, and I specialize in QuickBooks Online training and troubleshooting. And that's actually kind of the reason why I raised my hand to chime in, as we were talking about niches earlier. A few years ago, I had done set up for gas stations and convenience stores in QBO, and it was so intricate that I was so fascinated by it that I decided to niche in it, and I wrote a book and I recorded a course, and all those things are actually still selling pretty well. But every time somebody would call me up to say, hey, I need a gas station bookkeeper, my heart would sink, and I would say, oh no, they're really time consuming and complex. Are you sure you want to do this? And I realized that my heart wasn't in my doing the work myself anymore. And so when you are looking at a niche to pick for yourself, make sure it's an industry that you really resonate with as an industry, not just as a process. I still have the materials and I still train and support on it, but I don't take the clients anymore. And I actually refer anybody who's looking for a gas station bookkeeper out to other people now.
Awesome. Thank you. Coco, were you were unmuted? Were you asking a question, or Donna?
Oh, yeah, I'd like to chime in there. Alicia makes a really good point. The one thing that I really found that I like, and I do the same thing pretty much that Veronica does, I only use A2X. I do branch out into Amazon also, because a lot of my clients are using the multi-channel fulfillment between Shopify and Amazon. But just for anyone who wants to know, that thing's out there. But anyway, the reason why I like e-commerce is that even though I specialize in e-commerce, every single one of my clients is in a different industry. They're all creators. I don't do resells. I don't do anyone who's reselling. They've all created their own products and they're selling them on Shopify and building businesses and brands that way. So there's a lot of variables and things that you can, a lot of different industries you can get into. I'm probably in about 30 different industries right now. So just to put that out there, e-commerce is not like an e-commerce thing. You could be in a ton of different businesses at the same time. They all have their special intricacies above and beyond the e-commerce part of it too.
All right. Awesome, Donna. Thank you. And we have Pedro came up to the stage. Pedro, 15-second introduction of yourself and any question you may have for the moderators and the speakers here.
Awesome. Thank you. Good evening. Yeah, my name is Pedro. I've just started a small business here in Los Angeles. I focus around creating recyclable products. The first one that I'm working on is a recyclable table. So imagine like recyclable cutlery, plates, things like that. But this version would be like furniture. So this would be recyclable furniture. I have a question. The project is called Re-Rack. You guys are welcome to check it out in the bio. But my question, since I saw that you guys are, it's called CPA, Bookkeeper, and Pro Advisor Hangout. I was curious to know about like business expenses, laptops in particular, or computers, anything like that. I'm looking to purchase something, and I'm a little confused between what exactly it could fall under, whether it's an expense or it's something that could simply be depreciated down the road. Thank you.
Who wants to jump in? Audra, you want to jump in? I know you're a CPA. There's some tax questions there.
So as far as like the depreciation when to capitalize, some of that stuff is, I would say, operational. And one company could have a $2,500 threshold where they will capitalize that expense. Another company could have a $5,000 threshold where they would capitalize that expense. And what I mean by capitalize is book it as an asset and then depreciate it over time. I don't have the exact threshold that are IRS specific, but again, that is kind of company specific or operational depending on the pleasure of management.
Pedro, I'll chime in with Audra. Audra kind of used the more nuanced kind of accountant answer, which is actually great. It's perfect. So Pedro, in the simplest answer is, look, if you're buying or producing something that's going to have long-term value, in which if you were to sell your business, someone will look at that thing and say, yep, that's part of the value of that business, then you would make it an asset, right? That gets depreciated and all this stuff. But if you buy something that in essence, it feels like a personal property, that it doesn't really have any value when you sell the business, or nobody looks at it as infrastructure for the business, then it's not worth it putting it as an asset and going through depreciation. Now I'll give you sort of a life hack. The more assets you can put in your balance sheet and depreciate them, especially when you're a small business, with Section 179, you can depreciate them as if they were an expense. The slightly better it looks in your balance sheet when it looks like you have assets, even if they have no book value, because we depreciated the whole thing for tax purposes. The business looks like it's acquiring infrastructure. And even though it's easier and simpler to just expense it because it's not over the $2,500 threshold or whatever, sometimes there's some value in putting it in the balance sheet. So there's a little bit of planning from a presentation perspective that comes into play. But for the most part, in a practical sense, look, if it's going to be low cost and not going to have long-term value, then it's just an expense. Does that answer your question?
Absolutely. The laptop is definitely going under an expense. I really don't think it's part of the infrastructure at all. And I was curious about that. So that really helps me narrow it down. I do have some intellectual property on it. I have a design patent as well as a utility. So that would most definitely, now knowing this knowledge, I would put that under that category for sure. So thank you so much for clarifying that for me. Thank you.
Pedro, I'll add to that too. Because your exit might be not, selling 1 million tables or recyclable or whatever. Your exit might be selling to maybe a large table manufacturer that wants to have a wing of their business to be sort of sustainable, environmental friendly or whatever. If the long-term exit for you is to sell your business, what you also want to do is you want to look at all the ancillary costs around getting the patent, around getting the trademark, around getting the intellectual property. So not just the lawyers you paid for, not just that. What about the payroll that goes into the R&D for it? Because in the long term, you want to make sure that the cost of building that intellectual property is not just the transactions, it's sort of all the effort that came behind it. So there's a fine line between, overstating your assets and what I'm saying. I'm not asking you to overstate your assets. Just kind of like be hyper aware of all those ancillary costs that came right adjacent to getting these patents and these trademarks approved. Does that make sense?
Absolutely. Thank you. Yes.
All right. Does anybody else want to chime in, or someone for the crowd wants to ask a question? All right. We got one person raising their hand. Let me bring her up. Shannon. Hey, Shannon, ask your question.
I don't really have a question. I just wanted to say hi to everybody.
Okay.
Hi, Shannon.
Hi.
Hi.
No problem. No problem. Thank you for coming up. Leo.
This is my first time on Clubhouse, so thank you.
Yeah, you're welcome anytime. Well, we're going to build this community. It's going to be great. Leonardo, how about you? You have a question?
No, sorry, just stopping by to say hello.
All right, so we're gonna have a bunch of people that want to say hello. Who else wants to jump in? Hello, Leo, by the way. Thanks for coming up. Anybody else want to ask a question? Or if we don't get questions, we'll start wrapping it up. It's been an hour plus, so I think it's been good enough time. So if anybody raises their hand, we'll bring them up. If not, we'll wrap it up. Matthew, since you've been quiet for a little bit, maybe you want to do the closing statement, let's call it that. And then Jacob, you want to maybe have the last single word after that.
Thank you, Hector. I just want to thank you guys for actually pulling together. I'm new to Clubhouse as well, but I've already seen the power that it can have on community. And like many people have already said within this session, it's all about the power of community. It's helping each other out, finding ways that we can refer to each other, we can help each other when there's a challenge, and just help each other build our own respective businesses. So thank you for pulling this together.
All right, so Jacob, you want to have the last word?
Follow.
Follow
our moderators. Check out the crowd. Follow it.
Right.
Everybody.
Follow the group. Follow the moderators. Join us again. We'll have more of these conversations. Thank you to everybody that participated, that said hello, that asked questions, that added value. I think the accounting community can really pull together and build something nice in Clubhouse. Let's see where this takes us. Thank you. Good night.